BlackRock Latin America invests, as the name suggests, in Central and South America. Brazil and Mexico make up 65% and 25%, give or take, of the region's equity indices. So these are major areas of concentration for the trust. But it can also invest in Peru, Colombia, Chile, and indeed it can take off-benchmark positions in countries such as Argentina. Emerging market funds typically are very heavily weighted towards Asia, not just China and India, but also Taiwan and South Korea and others. In fact, Brazil now only makes up around 5% of the MSCI Emerging Markets Index, which means that the typical investor investing in emerging markets will probably have very little exposure to Brazil and perhaps nothing at all to Mexico or the rest of the region. So BlackRock Latin America offers exposure to an area of the market that investors typically have very little in a specialist, with a specialist team in a specialist vehicle. There are a number of reasons that Latin America looks interesting as a place to invest at the moment. And one of those is geopolitics. So currently we're seeing increased trade tensions between the USA and China, which means that countries typically fall into one of two camps, allies of the USA or allies of China. But Latin American countries are in a third group that can maintain good trading relations with both parties. This means that the region is a really useful potential site for manufacturing, companies looking to reduce their reliance on China. And Mexico in particular has really benefited from that in the last 2 or 3 years. It's become a major source or a major location for companies looking to reshore production away from China and countries that are too close to China. Another reason is the deep commodity resources in the region. This includes iron ore and oil, but it also includes copper and lithium, which are essential to the energy transition. And finally, we shouldn't forget the traditional reasons for investing in emerging markets, which is the rapid economic growth that comes from moving from a less developed to a more developed economy. Just as one example, the World Bank estimates that 70% of people in Latin America still don't have a bank account. So you can just imagine the growth potential there for financial services. And in fact, the largest business in the region at the moment is New Holdings, which is a Brazilian online bank. BlackRock Latin America is the only specialist investment trust offering access to this region. And it does through using the deep resources of BlackRock, one of the world's largest asset managers. So that means human resources, quantitative and technical resources, but also the great access that the portfolio managers Sam Vecht and Christoph Brinkmann have to key stakeholders in the region, and they visit the region regularly. But finally, we should also consider the dividend. So this could be a very interesting component of the investment case for many investors. The trust pays 1.25% of the previous quarter's NAV as a dividend, so that's 5% annualized. But of course, for investors on the share price, that's actually a higher yield thanks to the discount of the shares to NAV at the moment. So all in all, the trust offers some very interesting and diversified exposure to a region with some strong growth drivers. The trust performed extremely well in 2022 and 2023, with NAV total returns of around 21% and around 30% respectively. It's true in 2022, sterling strength did boost returns, but overall key drivers were the reshoring trend, which boosted economic activity in Mexico and elsewhere, and also the prospect of interest rate cuts in Brazil and other countries in the region. And in fact, BlackRock Latin America did very well by being overweight domestic and consumer-facing businesses in anticipation of those rate cuts. In 2024, however, it's been more disappointing, and the trust is down around 20% at the time that we're putting this together. Looking forward, I think the strong structural growth drivers for the region are still there, and now the markets are looking very cheap indeed. But I think this week 2024 is a reminder that this is a volatile region. There is very high growth potential, but investors should be prepared for volatility along the way, and that's partly due to the volatile politics of the region, the exposure to commodities, and its strong links to the global economy.